When people think of running R&D teams in places like Eastern Europe or India, I mean, the first thing that comes to mind is the cost, right? You think, all right, it's going to save us money. Outsourcing industry really laid the foundation for essentially creating a supply pipeline for having the talent simply available and the ability to tap into it quickly, right? This is the famous Skype effect, right? That turned Estonia into a powerhouse. 1 million of population and the number of unicorns per cap, right, is astounding. As a founder, as I said, right, you start with the vision, and you're on a crusade to fulfill that vision.
Welcome to the A Growth Ventures podcast. Today we're discussing venture capital and tech investments with Daniil Stolyarov, a partner at Almaz Capital Partners. With over 15 years in tech and investment, Dan connects Eastern European innovation with Silicon Valley. Let's hear his insights at Tech Finance Crossroads. I'm your host, Hamlet Azarian. Dan, thanks so much for coming on today. It's really an honor and pleasure to have you on.
Thank you, Hamlet. Good to be here.
Of course. So for those people who are the first time listening in, what we like to do is we kind of go through your career, your trajectory, and help budding entrepreneurs or emerging VCs to kind of hear your track and really share the stories and insights of your path and how you've gone from where you were to where you are here today. And with that, we'll start asking a series of questions. So Dan, can you tell me a little bit? I believe your first or one of your first roles was at Amro Bank, right? Correct? Or
that's right.
You were...
Hamlet, there are many paths that eventually lead you to venture capital work. Some people start in operations, some people are founders, technologists, some people do research. My track has been that of through financial services. And the things that probably made my specific track and experience a little more relevant to early stage venture investing is that I have always been doing tech-related financial services work. So I started at ABN AMRO at that time, budding and exciting technology team that was focused on. Remember, this is late '90s, so this is the internet. This is the budding e-commerce. Businesses trying to figure out what e-business means and how to fit it in. Sort of somewhat similar to what's happening with AI now. So indeed, I started doing tech M&A as part of a small tech-focused investment banking.
Got it. So were you drawn to tech investments right off the bat? Have you always been interested in emerging technology, or where did that path start initially for you?
Yeah. So I guess at that time I was mostly drawn to the industry itself. Investment banking looked to me like something that could be challenging, interesting, never boring. So that was probably the main consideration. I was lucky, I guess, that I ended up not in the oil and gas group or minerals group or retail team, but rather a team that was doing what at that time was usually called TMT, so technology, media, and telecoms. And telecoms was a big part of it. This is also happened to be the era when cellular providers were deploying all over the world, growing. There was a change in standards happening from 2G to 3G. Suddenly, the data pipeline was a product and a play for telecoms, not just the phone calls and SMSs. So lots of work at that time.
Amazing. And when you reflect back at that time in your career, what is one important lesson that you think you've learned that you've kind of kept it throughout your career?
Well, lots of lessons, and I think it's a combination. It's really a combination of small lessons that kind of accumulate and ultimately shape both the outlook on the industry and what you can do as a contributor, right?
I love that. So it's like little compounding lessons, one lesson on top of another lesson on top of another lesson.
Exactly. I mean, one thing that clearly differentiates tech from any other industry, and this is also why I found my work so exciting, is that nowhere else in the business world Of course, there are notable exceptions, but not as a rule. Nowhere else can companies scale from nothing to something, and that's it's a characteristic of the kind of product they're selling, something that's ultimately very scalable and something that delivers significant improvement in one dimension or multiple dimensions, something that is people embrace if the values is actually recognized properly and the pain point identified properly. Nowhere
Amazing.
else can do it.
In your role here, by the way, at this time, you are, just so for people can understand, you guys are looking for companies to acquire as part of an M&A, or what are you specifically looking in that particular team? Is that kind of the basis of what that team does?
No, not at all. This is Almaz Capital, and that's probably a good time to quickly introduce what we do. Um, it's a fairly traditional, classic in terms of model and approach venture investment fund. We do early stage non-control investments, just like most other investors that invest at late seed and Series A stage. This is what we do. So we try to identify businesses that have some initial traction in the market, some feedback from the customers, some form of product market fit, and then see if we can scale it with capital and expertise and support and team augmentation, which is what all early stage investors do, with the idea of accelerating growth.
Is there a particular, your investment thesis, is there a particular region you guys are more excited about, or a particular vertical that is more interesting for you guys? How do you go about like evaluating overall what you're looking for?
Yeah. Well, Almast Capital was set up more than 10 years ago, back in 2008. And it was done at the initiative of Cisco Systems, which looked at which strategically looked at globally emerging markets. Specifically, they were looking at that time at the region of Central and Eastern Europe. And they recognized that there are some interesting components there to potentially very robust tech ecosystem, right? You have a highly educated workforce, you have significantly large markets.
So this is like the former USSR
Former
countries?
USSR, primarily former USSR, but more broadly, similar things were happening in the Eastern Europe, larger region. The idea was and typically Cisco, in addition to just selling their stuff, right, to the usually rapidly growing telco industries there, it would typically go and partner with an investor or investors, funds that would kind of facilitate the ecosystem creation at the ground level. And what they recognize then is that there's really no one to partner with in that specific part of the world. There was an emerging private equity class, of course. There were later stage investments being made, but no one was really doing it professionally at an early stage.
Got it.
And what they did is that they thought, all right, we can maybe bring the Silicon Valley standards of doing venture investments, bring the expertise that may be not immediately available, and combine it with the local presence, with the local understanding, the local networks, to see if that would work. So they kickstarted Almaz back in 2008. I was not part of Almaz at that time. I was doing tech investment banking as part of a Lehman Brothers group here in Menlo Park.
Right.
These were it was still a year or two away from the unfortunate turn of events that essentially removed this 140-year-old firm from the face of the earth. But I joined Almaz later in 2013 when Almaz raised its second fund. The model got really established, and the model that was established and we still execute upon is presence is based on several things. One is presence, both here in Silicon Valley and in the region.
So you act like a bridge almost, right? You're able to connect all these let's say Eastern European countries to what's happening in Silicon Valley, and you become sort of a conduit, and you allow, it sounds like, if I'm summarizing, where in a region that an ecosystem didn't have one, you go in and you help facilitate it, and you're able to find the appropriate startups that could potentially become at global scale. Is that a good summation?
Exactly. The lessons that we learned, or the team learned in Fund One, is that the most effective companies that we were able to build back then, or help build, are the ones that are not necessarily focused on their domestic market opportunity, but can be globally relevant. Globally relevant in the world of technology adoption usually means having strong presence in North America. This is the largest IT market in the world by far. All the innovations as they appear, during their first few years of adoption, mostly adopted here. So if you can build a globally relevant product, you have to be here. So even though all of our companies, with really no exceptions, have a
Is it B2C, B2B? It doesn't matter for you guys.
well, it does matter, and I'll clarify that. But most of the companies that we ended up investing in are going after the global opportunity. Usually, they're U.S. companies being funded here, but they are either founded or co-founded by folks who hail from the region of Central and Eastern Europe, and usually rely and leverage the R&D talent and expertise and ability to scale, that expertise at significantly less cost than you can do it here. It does matter whether it is B2B or B2C. B2C stories do tend to have a local brand, right, and local momentum. They're grounded in the local psyche and cultural norms, right? So we don't see a lot of examples of really global B2C businesses, but for B2B, again, we're coming back to the market, and this being the largest market in the world for B2B, whether it's software or hardware. It requires understanding of the client need here in the largest market. So if you look at our portfolio, most of our investments are in the B2B space.
Got it. Is there a particular portfolio company that at this point has maybe exited that you can kind of shine the light on and give an example of why it was so successful or why it did well, you believe?
Well, there are quite a few companies, and I'll probably give you example of both categories, right? So I already mentioned that consumer stories tend to be local and tend to really work well with the local market as opposed to multiple global markets. So one of the companies that we invested in Fund One, for example, was Yandex, which obviously built a very successful, and I won't comment on sort of the more recent events and turn of events, but over the last 10 years, it essentially built a strong competitor to any global Silicon Valley leader, both in terms of talent, in terms of reach within their own market, which they identify as primarily speaking Russian, right? So that was an example of a company that could do that locally. It was sufficiently large market, and usually that means web, consumer web stories, right? Most of the other companies that we had exited are companies like, well, I'll give you a few examples because they're significantly more numerous, right? In terms of the brands that people might be familiar with, companies like Parallels or Acronis. Parallels was the leader in software virtualization. Back in the day, if you wanted to run Windows on Mac, that's what you would buy. Probably still is. I think Parallels Desktop is still a pretty popular product. Acronis is a leader in the backup software and disaster recovery. Multi-billion-dollar company, still private. We're still in it, but I'm
And
sure.
most of these you guys got in pretty early. You were like one of the first checks in there.
Yeah, for those specifically, it was still early stage. I think we invested in parallels back in late 2000s. So this is like 2009 probably. So yes, we were there early in. But if you look at what these companies are, right? No, they're clearly global players. They have a product that resonates. I believe for Acronis, revenues is truly global. The US is probably 20%. I don't quite remember, but both of those teams have R&D that's not US based, right? In the case of Parallels, they had a very sizable team in Russia, hundreds of people essentially designing and working on this. This is a couple of examples. And both of those companies were founded by people from the region who managed to go global essentially.
What is that advantage, do you think, that having R&D that's, let's say, international or global, not necessarily in US, is it you're able to get a bigger team faster, or with less capital risk, and you can then allocate the capital to something else like marketing or sales? Or can you talk me through a little bit strategically what are some of the advantages that way?
Of course. When people think of running R&D teams in places like Eastern Europe or India, I mean, the first thing that comes to mind is the cost, right? You think, all right, it's going to save us money, and indeed it does. That difference kind of evolves and shrinks over time, but that's really not the most important thing. When you build a tech business, going back to my point about the scalability and how quickly those businesses usually develop if they're successful, you make your decisions while trying to optimize for growth, right? Growth is really the stone against which you
Are measured against, right? How quickly are you growing, and how efficiently are you growing, and all of those great things.
And that makes sense because you're using the most expensive money in the world, right? Venture investors, equity investors, even though we don't expect a coupon or we don't charge interest or anything like that, right? It's still the most expensive expensive money in the world if you think about the expectations built in when those investments are made.
The speed, the pressure of growth, how fast are you going to scale up, all elements of that. Yeah.
There's an implicit IRR expectation that every venture investor has because their LPs also have that implicit, IRR expectations adjusted for the risk of being in that asset class. So when you optimize for speed, you can, for example, I'll give you a quick example. In Silicon Valley, you can find all kinds of R&D and engineering talent, anything you want, really, right? And forget the cost of it for a second, but those people are busy. There's a lot of competition for it, right? To build a stellar team, if resources is not a constraint, is certainly possible, but it will take you time because you'll be essentially handpicking every single one of them. Whereas in places like Poland or Ukraine, there's a lot of high quality talent that can be built quickly at scale, right? And that is partially, it's a function of a very robust IT outsourcing industry, right? So there's just a lot of talent.
Historically, the countries might have been, because I can relate to Armenia a little bit here as well. Historically, this region might have been outsourcing or offshoring type of an environment. So then it's allowed developers to learn the craft, the skill, and it has an ecosystem for building great engineers. But now, as they have shifted potentially from, let's say, being sort of an outsourced region to more building products now, it's easier to collectively to put teams together faster. Am I summarizing it, or?
I'll comment on that point. I think it's a slightly different point that you're making. The outsourcing industry really laid the foundation for essentially creating a supply pipeline for having the talent simply available and the ability to tap into it quickly, right? That combined with the educational system that continues to kind of churn out and produce this pipeline of candidates that then go into development and then go into product. That laid the foundation, and that's what was happening, let's say 10, 15 years ago when you were building a startup, trying to kind of make this bridge model work. Usually that meant taking an R&D team, combining it with the managerial expertise that exists here, and then trying to work it out, right? Over the 10 years or 15 years that passed, a very robust and successful startup ecosystem came to be. This is the famous Skype effect, right? That turned Estonia into a powerhouse. 1 million of population, and the number of unicorns per cap, right, is astounding. This is the famous Skype effect, when you have a success that really is significant within the context of the local scale, and it creates both a breed of new, managers, entrepreneurs, and investors, because many of the people that that were successful building their own businesses, they quickly turn and create another piece of the ecosystem, the angel investing, right? They start to support that ecosystem even earlier, right? So over the last 15 years, that region had a number of those events happening. Armenia has a couple of its own, right? As well as Poland, Romania, Czech Republic. Each one of them had a Skype moment that keeps on now growing. And so now when we invest, it's not your typical, get the R&D going and find a CEO to with the mindset here to create something valuable. It's more and more you see truly tech entrepreneurs that already been at it, once, twice, three times successfully, that hail from the region.
Amazing.
Yeah.
And when you think about that, right? So I think a common challenge that most people might say, or say, hey, if you're building a B2B global enterprise, how would you know how to sell, let's say, to the US market, right? And so are you seeing like a balancing act where R&D might be based in that region, but sales or marketing is experts in the US market? Or what are you guys seeing that becomes commonplace in some of your portfolio companies?
Yeah, the most powerful combination, I think, when building a B2B business that's set up globally, it's set up as a bridge essentially, is it starts with the founder, right? It's usually the founder or founders who have a vision and a sense for a pain that they're trying to solve, right? They're on a crusade to solve a pain. And that pain translates into the market opportunity, it translates into ability to compete effectively with whatever solution is out there. So understanding the pain and being able to recognize it, of course, is not something you can do if all you did was working in Romania doing outsourced development, right? That doesn't work this way. So the most powerful combination, usually when founders have an understanding of pain, what we see happening is that a lot of people that create those companies are people that have already worked in Silicon Valley, that worked in this market, that were part maybe of larger teams, companies like HP and Cisco and Google, et cetera, right? And that understanding of pain, they saw it, right? They saw it not being addressed, and that's usually
they were dealing with it all day long, basically.
Right, and then they go and say, all right, I want to address it. And because they are from the region, right, they would also recognize the value and their own ability to be effective with running a team that is not in Silicon Valley, right? That means that when we find deals for us, we are very, very, very interested in understanding and keeping tabs on what's happening in within the diaspora, within the tech diaspora here, of all the founders that are relevant for our region, and because they're usually the ones that come up with a vision in the first place. Yes, you do sometimes. There are exceptions, right? Sometimes you do find a company that suddenly is globally relevant, but that is very rare. That is very rare, and it's simply and it comes down to just not being here and not hearing the market, right?
I love that. So let's take a slight pivot here and kind of talk about, and I know something that you're really great at, which is most people think startups typically go from startup and the dream is that it goes IPO and that's the exit path. But the reality is what typically happens more often than not, a typical exit might be an M&A or a strategic acquisition and so on and so forth.
Mhm.
And can we talk a little bit about your background in M&As and a little bit of your experience there, if you don't mind? Maybe you can share with the listening audience some things you've done historically in different areas that you worked at, that kind of so they can see where your expertise in that particular area is as well too.
Yeah, of course. This goes back to my investment banking background. Before becoming a venture investor, I spent essentially almost a decade doing that. Investment banking is not really banking in the true sense of the word, right? There's no money, that we lend or collect or pay an interest on deposit on, right? This is advisory, and this is a very specialized advisory that combines that has to combine two things, right? The knowledge and understanding of the financial markets and how they value things, essentially, and industry, right? IPOs and M&A advisory is really what investment bankers do. When you do tech investment banking, debt is less, of a common product, unlike other industries, although it does happen fairly frequently for companies that are large, and that becomes a way to optimize how their capital works. But at the early stage, if you're advising tech companies as an investment banker, you really advise them on two things, right? Either being acquired or acquiring other companies, or tapping into equity markets, public equity markets or private equity markets. That's what I did essentially. Most of this was done here in Silicon Valley. As I said, I was part of the Lehman Brothers tech banking team until the very end of Lehman Brothers. I spent then a few years working at Cowen and Company, which is also an investment bank that only specializes in tech and pharma, just a couple of high growth sectors. When you do that, you need to understand the industry that you're covering. That's why there's always specialization, right? You either focus on software or semiconductors or communication technologies, because when you do M&A, what you need to understand is you need to understand how whatever this company is building that you, let's say, helping to get sold, how it fits and in whose product vision and product strategy, if we're talking about large acquirers, or similarly, right, when a company looking for acquisitions, you need to understand who and what could be a good fit for the company you're advising. So understanding the industry trends, understanding the market development, and understanding the technologies that kind of affect the industry horizontally is something that you need to develop. I'm not claiming to be a technologist or a technology expert. So I'm not an engineer by training at all, but understanding how these functions as markets, as industries, is what's required. The second element,
a stage that a company should be thinking like what advice would you give to your portfolio companies? Like, hey, once you've reached or developed this technology, be open to an M&A, or at what point should founders be receptive to this, I guess, that you think that some founders might not be, and they might not realize what an opportunity might exist that could potentially even accelerate their business more, right? The right strategic partnership could be a new distribution channel, or it could be an infusion of capital at the right time that can help scale the business even more. All of those things.
All of those things. As a founder, as I said, right, you start with a vision, and you're on a crusade to fulfill that vision. And most of the time, when a larger company acquires you, the consideration is not just, okay, am I going to get rich out of this or not, right? Is this going to be my opportunity to strike gold? They don't abandon that vision, that quickly usually, right? The good founders, they recognize that vision can be executed upon even faster or at a larger scale if they have the resources that the acquirers give them. In tech, at the early stage, it is very rare that those companies are being acquired for their scale or for their revenue, right? Because that's for that to really happen, you must be able to move the needle for those big guys, right? When Google acquires someone, most of the time it's not because it moves the needle for their revenue. It is because they are looking at it as essentially outsourced R&D. So they will be acquiring the team. They will be acquiring the vision and your ability as a founder to actually keep on executing on that vision. But they will give you the resources to do that. Being open to the idea or not being open to the idea, once you have a board, and that happens when investors are on your cap table, right? It is board's duty, right? It's a fiduciary duty to consider, when options like that are being presented. You need to review it with all due care because you have a responsibility to your investors. And if you say yes or you say no, it needs to be really done through the prism of, are you serving the shareholders best by doing that? Another important thing to say is that investors very rarely would force one or the other outcome here, right? Venture investors are not in the business of running your company, right? They're there to help you. They're there to support you, give you the resources, their ability to, for pattern recognition, their ability to point, the mistakes that they've seen already happen in other companies and help you avoid making those mistakes. They are the sounding board, but they're not running this business. If we end up in a position of having to run a portfolio company, that usually means disaster of some kind, right? That's we're in a crisis mode. We don't like that. We're not that good at running businesses, right? So most of the time, and it's certainly our philosophy, and many VC investors that I know, we would go with the desires of the founding team, right? If they say no, we really think we should proceed on our own and execute, and we know we can do better than that, right? It's usually go with that, right? You don't overrule, you don't force them to do something because it's their company, they're running it, they're ultimately executing on that vision. And similarly, if founder says, yep, I think this is a good combination, even though we might have hoped for a different outcome, right? We would probably go along as well.
Do you have examples of both you could talk to a little bit, like an acquisition that you were a part of that allowed the business to scale further, and something along the lines of that? And what was the point where you all saw it, right? You're like, wow, this is a perfect fit. Like, we can truly see this really helping scale this particular business further.
Yeah, I'll speak about a story where I was involved. I led an investment in a company called MakeTime. This is an example of a B2B business, but really working on introducing a marketplace model, something that we associate mostly with B2C, right? The Uberization of various industries. They were doing it with manufacturing. Just a quick kind of vignette, right? Back in 2005, I met a founder out of Kentucky, very completely non-traditional for where you find a founder. Although we met here in Silicon Valley, he came from Kentucky with a manufacturing background, and this is actually what create actually a degree of comfort, right? Because if you don't expect someone who spent their life working in HP or Google to understand what a machine shop in Ohio would need, right? And what their pain is, right? But someone from that ilk and from that background is credible, right? In that sense. But it was still a somewhat unusual combination. But rarely, and this is also venture investment mindset. You always look for big opportunities, right? Every investment that you're making should be able to produce an outsized return for you, right? You will fail most of the time, or your investments will fail, but the ones that don't, right? They should be able to create outsized impact on your portfolio. So you don't invest in little ponies, right? You don't hunt for ponies. There always has to be an attempt to build something big. So with manufacturing, I was looking essentially at a TAM, at a market opportunity that measures in trillions of dollars, right? You rarely see that. So even though the founder didn't have all the trappings of the typical tech founder, combination of the market size and closeness to being able to understand the industry was very intriguing. And this is where I thought an investor could potentially help, right? Because we know how to build tech businesses, they know the industry, we can probably figure things out, right? So I led the first investment, the first institutional investment in this company. They built, and we kind of helped them build and manage the team in Ukraine, who really gave them the talent they were definitely lacking in Lexington, Kentucky.
Right.
And the idea was very simple. Like all marketplaces, you recognize there is a capacity resource that's not being fully utilized.
So with this investment particularly, where you guys saw, if I'm understanding, he was an operator, he knew the pain point, he knew the problem, he kind of conceptualize what needed to be built, but they didn't know obviously how to get the resources properly to build it, or they had the proper capital in place to be able to execute it.
Capital,
and that's where you guys came in. Am I okay?
That's right. And another important thing is most of what investors do is actually HR, right? Most of the time we spend is actually interviewing people, interviewing candidates, interviewing executives. You help create a kernel. At that stage, you kind of create a kernel of the team that can execute.
Right.
So that was a lot of that happening right after the investment. So we led the late seed round. Then there was a Series A that was led by a fund out of Colorado, out of Boulder, Colorado. You're probably familiar with Brett Feld. That's he's
of course, Techstars. Yes,
blogger.
Yeah.
So that was that firm that led the Series A, and even further improved of what we're starting to build. And we started to see the momentum, right? As a marketplace is, on one hand, it had to have machine shops with their capacity and the machines to actually produce stuff. On the demand side, it had to find clients that would need stuff made, right? And creating them not through the antiquated RFQ process where you try to figure out where you can make stuff, but through essentially an Amazon-like experience where you upload your CAD files. The tech behind understands the complexity of the part, understands the material, understands the process through which it will be created, and matches you with a machine shop that can execute on that. So we, of course, when you stumble upon an idea, you're usually not alone, right? And this is where I'm going with answering your original question, right?
Right.
There was another company called Xometry that was building something similar. They were
they far ahead or around the same place, or where are you in the process?
They were a little bit ahead of us. They were
Okay.
a little bit ahead of us, both in terms of traction and in terms of resources available to them, pretty much in terms of everything, in terms of building the team, in terms of revenue traction. And important to understand, building marketplaces is hard. right? It's long. It's a chicken and the egg problem. You need both the demand and the supply, and you need everything needs to work right and in balance, right? But once you succeed, it's very hard to dismantle you because of the network effects that kick in, right? So it's a big prize at the end, right? And we recognize that they're a little bit ahead of us, but there was something very important here. It was not a strong overlap in terms of the network that MakeTime had and Xometry had.
Nice.
There
So,
was
so basically the supply network that they had was not the same supply network that.
it was not the
Amazing.
same, right? We had thousands of machine shops. They had thousands of machine shops, but they were not the same machine
I'm
shops.
sure there was some overlap, but it was one of those classics. If you combine them, we go from 1,000 each to 1,800 or something.
Exactly. Exactly. So if you combine those, it's a real you have a real opportunity to build something much faster and really be ahead of everyone, right? This was the recognition on the part of the founder that even though, you know, I'm sure he had his own goals and dreams and desires, but he recognized that this actually can be more, and he can be more successful, right, if these things are combined, right? So essentially, we did that. We merged the two companies together. As I said, we did it right after Series A. We had and Xometry just had their Series B done, right? So they're one step ahead of us.
Right.
But once these teams were
Both organizations were just now flux with new capital, and then you ended up merging. That's amazing.
Exactly.
Usually you would think, hey, we just got the capital, let's go. Let's try to grow. But the opportunity here of the 1+1 was so great that it was no, let's combine them now. Let's really go.
Yeah, exactly. So we combined it. It was mostly a stock deal. Then we and Foundry, the fund that I mentioned before, we both invested in the combined company and joined the ranks of the investors that were in Xometry. And very quickly, the results of that combination started to manifest themselves. Strategics recognized that suddenly there's a very big force shaping the manufacturing industry. General Electric, Bosch, BMW, all invested. A couple of years later, we did a growth equity round with a kind of pre-IPO, typically pre-IPO investor, and then Xometry went public.
So from the time of the idea to the acquisition or the merger was how many years? Was that like 3 years, 4 years, or?
It was probably like 2.5 years.
Oh my goodness, that quick, huh? So it went from idea, let's build this, to M&A, and then from the M&A to going public was another how many years?
So maybe the idea, we invested in a business that already, they're already functioning. So it was probably a couple of years old. We invested, did Series Seed. Then there was Foundry Group with Series A. That took another 2.5, 3 years maybe. And that's when the merger happened. But once it happened, it took, for these both essentially fledgling companies, it took another 3 years to create a market leader that defined the category and went public.
Phenomenal. So what a wonderful story. Thank you for sharing that. As you guys, everyone here, Dan, thanks for coming on today. It's been really an honor to having you and sharing your background, your experience with us. First sharing about what Almast Capital does and how you guys go and look for incredible founders to invest in, and then let alone talking about some of your incredible M&A background and how you can help different founders, not only with the capital, but the added value that you guys do clearly, and helping them think through strategically how to maximize shareholder value. Dan, if people want to get a hold of you, what is the best way to do that? Is it through LinkedIn? Or
LinkedIn is probably the best way. My email is also available on our website, dan@almazcapital.com. So either one of those methods is fine.
Perfect. And we'll make sure we leave that in the speaker notes and listener notes. Thanks again for everyone for listening in. This has been another episode of the A Growth Ventures podcast. Keep listening, keep subscribing, and keep pushing growth forward. Thank you, everyone.
Hamlet.